ready to find new things about cryptocurrency, and let's see what these things really are. So the beauty about cryptocurrency is that people are more than willing to share their research rather than keeping it all secret, because the more people that invest, the higher the price will go and the more money everyone makes. This is the total opposite of most business, where everyone keeps their money making secrets to themselves. So yeah, this is truly a win-win situation. um, so one of the slang terms in the cryptocurrency community is to the moon. It basically just refers to the moment when we all make it rich. If that ever happens, people hope that one of their altcoins, which are actually affordable to buy, multiple shares, will someday be as valuable as Bitcoin. Only time will tell. So, to the moon is the phrase that people use as a slang term. It's a pretty optimistic way of seeing things. It's a pretty optimistic way of seeing this cryptocurrency thing, and we can just hope that this will really happen and cryptocurrency will develop as it should. So another slang term in the community is HODL. It's a misspelling of the word hold, and it stands for hold on for dear life. It is what it sounds like, the strategy to get as many coins as possible and not sell, no matter how many highs and lows may happen. So you have to hold that coins, not to sell. So Bitcoin got a bad rap when the Silk Road got into the news. If you weren't aware, the Silk Road is a drug trafficking website on the dark web. However, in the real world, drug dealers use cash, so there is no paper trail. That doesn't make cash bad. Despite this flawed logic, the price of Bitcoin plummeted for years after getting this bad press. The founder of the Silk Road has been nicknamed the Dread Pirate Roberts, like the character from The Princess Bride. A man named Ross Ulbricht was identified as the Dread Pirate Roberts, but later Wired magazine identified one of the critical staffers and possible ringleader of the Silk Road as a user operating under the pseudonym Variety Jones. Who is Variety Jones? The mystery is still unsolved. Additionally, the FBI has only been able to seize a very small amount of Dread Pirate Robert's fortune. So there are a lot of mysteries and pretty adventurous stories around cryptocurrency. It's pretty really popular. It's getting more popular with time, and people involved in it are I don't know, creating this kind of intrigues, and let's see what more we can find about this, because the stories are getting more and more interesting. So many people apply traditional stock market techniques to the cryptocurrency market in order to make money. Well, I thought about this. So at this point, Bitcoin is worth so much money that if you pay with any other currency, you're going to receive a fraction of one Bitcoin. All of those zeros in your Bitcoin have been nicknamed Satoshis after the mysterious founder. This is really an interesting fact. So Bitcoin is really valuing a lot of money. It's a pretty it's pretty much a valuable coin, and people who use this may have the surprise to really find its value raised up in in the years that come. So it's something imprevisible. It will be a surprise for people who try this cryptocurrency. There is even a documentary on Netflix called Banking on Bitcoin that gives a very in-depth look as to what Bitcoin is, how it works, and how it can change the world. So if you have time, you can stream it. It is on Netflix, Banking on Bitcoin, and you can find there more informations about Bitcoin. Venezuela's currency, the bolivar, has a value that is plummeting. In order to maintain the value in their money, many Venezuelans have begun investing their money in Bitcoin instead. Ooh, that's really an interesting fact. Mark Cuban, a venture capitalist who became famous from the TV show Shark Tank, has decided to create his own Bitcoin investment firm. So there are people who really believe in this, from what I see. There are people who really believe in the potential of this Bitcoin, and who knows, maybe in some years they will really be billionaires. So let's just wait and see, or we can try it for ourselves, and then maybe we will be those billionaires. So we never know. In China, many businesses are already using Bitcoin. They see this as the answer to the problems they are facing with bank transfers, since they manufacture goods to send all over the world. Ripple is already hiring over 200 new employees in China to help facilitate their integration of blockchain into their banking system. This is pretty an interesting thing. So people around the world are really trying to develop this process, are really trying to invest in cryptocurrency. They are really eager to invest and use this as it should, because they see its advantage. They see that there are no fees, that the transfers are made really faster and easier. They see the good part of it and trusting it, starting to use it. It is already a worldwide spread process. All of the major banks have hired Bitcoin specialists because they are preparing for the inevitable reality of converting, at least partially, to cryptocurrency, or at least incorporating it into the system that already exists. In 2010, a man named Laszlo Hanieks was experimenting in Bitcoin back when it was still very cheap. He decided to use 10,000 coins to buy 2 pizzas with his friends. So he just ordered 2 pizzas. Of the time this article was written, those coins would have been worth more than $45 million. So I just found an article where it says that this amount of money was then Bitcoin valued. So can you imagine that? It's a lot. He just used that money to buy pizzas, but after some time, those money were really so much that he could have bought, I don't know, 2 houses and 2 cars and 2 yachts or everything. So that's really amazing. The price of Bitcoin keeps going up. That's another interesting fact, because some people believe that someday 1 Bitcoin could be worth $25,000 or more, but who knows that? So there are really a lot of interesting things, because now let's see how much does now a Bitcoin value. So I think that limit was already reached, yeah, because one Bitcoin now in the present it is 36,260 dollars. So that's really a lot. That's higher than people estimated this in the past. As we can see, they could never expect for Bitcoin to become so valuable as it is now. I mean, they were just supposing this will be this will have another value in some years, but they couldn't really tell that it will become really so precious now. But things were moving fast from what we can notice, and we can hope that it will be the same and things will really develop in the future for this. So let's see some news about cryptocurrency. We can just learn new things about cryptocurrency now. I mean, we can see what happened now in this month, in this time of the year, not just general facts. So for instance, Bitcoin edges back from $40,000 as volatility lingers. So Bitcoin climbed back above $40,000 on Wednesday for the first time this week, before edging off its highs as recent volatility in the cryptocurrency market showed few signs of dampening down. So this is actually like, it has these fluctuations. It's nothing so stable. Maybe this is the big disadvantage of cryptocurrency. The fact that it is unstable until now, but maybe this thing will be fixed in the near future, who knows. So for instance, billionaire Mark Cuban invests in made in India Polygon crypto. Let's see. So homegrown blockchain technology firm Polygon has received a sizable investment from US-based billionaire entrepreneur Mark Cuban in lieu of its tokens, co-founder Sandeep Narwal. So Polygon has been added to Cuban's portfolio of companies with a description that read, quote, Polygon is the first well-structured, easy-to-use platform for Ethereum scaling and infrastructure development. So you can search for this. It is something pretty recent, and it's interesting that suddenly Bitcoiners and Ethereans just swapped talking points. So everything's getting weird in the crypto world, but to understand what's going on, we have to see one podcast episode with Aaron Lemmer, an Ethereum true believer, who was asked what he thought about Elon Musk going after Bitcoin over green cancers. So we can just look a little on this interview, and we will find more about this. So Tracy was saying, okay, just one more, but on a day like today, when you know Elon Musk tweeted Bitcoin fell 16%. Although you know, as we're recording this, it spared some of those losses, but all the crypto coins, all the crypto related stocks are all falling. What was today like for you? Like, what did your yield farming portfolio look like? And Aaron is answering, you know, I honestly didn't even check like most of this yield stuff, just kind of happening in the background. I look and see how much I've made, but I'm looking more at the prices of the tokens than yields. I think that there are people who are just seeking yield out there, but those are people who have a lot more capital to start with than I do and are like not wanting to risk it, but want to just earn yield on like stable coins. I'm primarily holding Ethereum and other DeFi tokens. So when I saw that, I actually was happy because I'm in Ethereum. I'm a true believer and I believe that Ethereum will pass Bitcoin at some point. And I'm fine with accelerating that if it can pass Bitcoin by going up or by Bitcoin going down. And I love the hostility and the space between the two camps. It's getting ugly out there. So we can clearly see that there are these two camps, Bitcoin and Ethereum fans, let's say so. And there is kind of a fight between these two big cryptos. So let's find out more about this. So basically, a couple of weeks ago, when Elon Musk went after Bitcoin and tanked the entire market, the reaction among at least some Ethereans was that it was good, because Ethereum has a plan to go green, and Bitcoin will always be proof of work. So if proof of work becomes vilified, then that's good for Ethereum in the long run, even if in the short run they all collapse. That's the theory anyway. Except now Musk is sounding warm to Bitcoin again, talking about his discussions with miners regarding renewable energy mining in North America. Actually, the full context is that Michael Saylor, the MicroStrategy's chief executive officer, is convening a meeting between Musk and various miners. And note, he specifically cites ESG considerations in the second tweet. What's interesting too is that while Bitcoin leaders start to toot their green bona fides, the Ethereum world is starting to sound like hard money types. A lot of people are talking about this Becky McCormick blog post about upcoming changes to the Ethereum protocol, one of it which includes a plan to slowly shrink the available number of coins out there. So there is kind of a war, because both Bitcoin and Ethereum are surging today after a horrible weekend. So for all the ostensible disputes between the two camps, they still trade more or less in unison. There is this war between the two of them, and both have a lot of people who appreciate them and who hate the other one, and that is how this war is created. But I don't think that actually one is superior, or of course each of them has advantages and disadvantages, but you can't really say that one of them is superior until now, and this is a really questionable war between these two. So let's see what more are they saying about this. So this Bitcoin chaos will blow up your cyberpunk utopia. So Bitcoin's wild gyrations in 20 and 21 have made sure of one thing: the future of money will be electronic, but it won't remotely resemble a cyberpunk utopia. People's power will bow to sovereign's might. So we all saw those cyberpunk styled movies where everything is in the digital world or electronic. But even if in the future money will be mostly electronic, maybe it will really not resemble that way. So the mania and panic that have gripped decentralized cryptocurrencies are heightening the attraction of their coming rivals. So let's see which these rivals are. Digital cash issued by central banks. These tokens will be state centralized and state controlled. That's exactly what users will want in an Internet of Things where machines need to settle claims with one another all the time, but without contributing to global warming. Official electronic coins will be a new type of central bank liability alongside physical cash, though for investors betting on the future value of the dollar, yen or the euro, they won't be a novel asset class. That has clear advantages. To avoid becoming a lightning rod for fresh speculation means that a global economy powered by Fedcoin, digital euro, and China will make far less demands on energy resources than cryptocurrencies. So, in the absence of a trusted intermediary, the mining or proof of work protocol that keeps the blockchain secure from double spending attacks requires power guzzling hardware. So can you imagine how much is that electricity, that power used, if it can light up 16 million American households? That's huge. That's really huge. So not so for the distributed ledgers that will verify transfers of official coins. These ledgers will only be held by a select group of intermediaries with the central bank's permission. Instead of being in a race to solve puzzles faster than malicious actors, as we see with decentralized cryptocurrencies, the nodes in the network can lock their own funds to back legitimate transactions. So this approach, known as proof of stake, will require a fraction of the energy proof of work needs. Ethereum intends to switch. The cryptocurrency Ether will replace hardware and electricity as the investment needed to secure the network. Validators will earn fees by locking up at least 32 Ether. So if they misbehave, go offline, or fail to do their job, the processor can lose their collateral. A central authority can perhaps run such a network better. After all, those who are vouchsafing transactions must have skin in the game, as they claim, and somebody trustworthy must ensure that they do. So, central banks that aren't constrained by how much fiat money they can create out of thin air use that flexibility to avoid catastrophe, as they did recently during the COVID-19 pandemic. By contrast, a Bitcoinized economy can be dangerous because of finite money supply. As law says, if you fix nominal variables, real output has to adjust violently to absorb any economic shocks. This seems pretty interesting, and let's see more let's see more news about cryptocurrency, because there are so many things happening every day, every week with cryptos. Things are changing so fast that a lot of news are there about this subject, and it's a lot going on. Things are really moving fast with this subject. So let's see, for instance, that Elon Musk tweets he supports crypto in battle against fiat currencies. Elon Musk was again tweeting about technology and cryptocurrencies, and this time he was clear on where his support is at. In a thread started by Musk himself comparing magic to technology, where someone asked what he thought about people who are angry at you because of crypto, the Tesla Inc. CEO tweeted that, I quote, "The true battle is between fiat and crypto. On balance, I support the latter." So Musk has made similar comments before, including in December when he tweeted that, quote, "Bitcoin is almost as BC as fiat money." In February, he elaborated to say that, quote, "When fiat cryptocurrency has negative real interest, only a fool wouldn't look elsewhere. And earlier in the week, Musk had tweeted that he won't be selling any Dogecoin, and he also posted a cryptic image of a dollar bill with a Shiba Inu dog replacing the face of a former US president. This is pretty funny. I will search for this. I think you can find it on internet. Bitcoin ended the week in volatile territory after a new warning from Chinese officials over cracking down on cryptocurrencies. The earlier sell-off on Friday hit Bitcoin believers still fuming after one-time proponent Elon Musk did an about-face and criticized the token for its energy usage. This was a pretty funny news actually. For instance, it's interesting to find out that oil drillers and Bitcoin miners bond over natural gas. On US oil patches stretching along the Rockies and Great Plains, trailers hitched to trucks back up toward well pads to capture natural gas and convert it on the spot into electricity. The trailers, carrying pipes, generators and computers, are called mining rigs. But their owners aren't there to drill for oil. They are using stray natural gas unwanted by oil companies to power their search for another treasure, cryptocurrencies like Bitcoin. So, extracting the currency from cyberspace, however, requires vast amounts of often expensive electricity. Supercomputers must run constantly in a race against other miners to solve complex math problems in order to unlock digital vaults holding the currency. There's a lot of electricity implied. There are a lot of supercomputers. That's a pretty vast and big technology and powerful computers implied. And placed in mobile trailers, the supercomputers run as hot as 160 degrees Fahrenheit. That's 71 degrees Celsius. And in the cold of western North Dakota, people stay warm just by sitting near them, cryptocurrency miners say. Can you imagine how powerful that computer are if they work at such big temperature and people can warm up just staying near them? That's pretty insane. So the miners are increasingly sending these rigs out to oil fields because it's one of the cheapest ways to obtain the energy they need. Oil and natural gas come from the same wells, but at these sites, drillers are seeking crude oil and have no pipelines to get the gas to the market. That typically forces them to burn it off in a process called flaring, creating carbon dioxide emissions, or to vent it into the atmosphere directly as methane. And Steve Degenfelder, land manager at Wyoming-based producer Kirkwood Oil and Gas, says that the sweet spot for us is stranded, low volumes of gas that don't justify a pipeline. So, oil companies face pressure from investors and government officials to reduce emissions that lead to global warming. Sometimes they give the gas away for free to cryptocurrency miners. Other times they sell it. So sometimes they give the gas for free. Other times they just sell it, and some environmental advocates and investors say cryptocurrencies are not a long-term solution to unwanted natural gas emissions, both because the currency's future is highly uncertain and because Bitcoin and other cryptocurrencies companies produce their own emissions. The global Bitcoin industry's overall CO2 emissions have risen to 60 million tons, equal to the exhaust from about 9 million cars. That's so huge. I mean, that's so huge CO2 emission. That's up from 20 million tons from 2 years ago, according to a March report by Bank of America analysts. Value of Bitcoin, the best known cryptocurrency, plunged from record height after billionaire Elon Musk tweeted that his electric car company Tesla Inc. would no longer take the virtual coins as payment. Andrew Logan, Senior Director of Oil and Gas at Ceres, the Boston-based clean energy investor group, said there are better ways to use stranded gas, including to power hospitals and schools. However, that would require building pipelines to carry the product out of the oil patch, he said. He said that I think we need much more durable and long-term solutions that really bring that gas to market and let it be used for whatever its highest purpose is. Proponents say the new oil cryptocurrency alliances in North America move mining for virtual coins away from Asia, home to more than 60% of such operations, which largely rely on coal-powered electricity. Coal combustion produces roughly twice as much CO2 as natural gas. For instance, Mark Ledine, Vice President of Strategy at oil and gas software company Validator Technologies Inc., says that it helps cut emissions at an oil producer level, but also globally by reducing mining in parts of the world where coal is likely the power source. This is a really interesting but somehow worrying fact. So the allure of Bitcoin remains for miners despite the challenges of cryptocurrency markets. Even after the recent price crash, a single Bitcoin was worth more than $40,000 on Thursday, almost 90 times its value 5 years ago. If you search on Google this information, you will find that one Bitcoin is, like I said before, 36 and something dollars. So $36,000, of course. But here it says that it was worth more than $40,000. So that's really huge, and I suppose it depends on the place and on the time you are searching for its value. So some cryptocurrency mining companies say the mobility of their natural gas fueled operation is key, giving them flexibility to draw natural gas from different sites as it becomes available. For instance, Haley Thompson, a former electricity trader and president of new cryptocurrency mining company Imperium Digital, says that the idea that you could plug in these computers and then take them somewhere else just really caught my imagination. A variety of business models have been born. In some cases, cryptocurrency miners pay the oil firms for their natural gas wholly or in part using the coins they mine. In the case of Kirkwood, Easy Blockchain uses stranded natural gas to make Bitcoin, giving it all to Kirkwood. Easy Blockchain makes money by supplying equipment and mining services for a fee. Industry experts and academics who study energy uses say there are fewer than 10 large-scale Bitcoin mining companies in North America that run on stranded natural gas. Many cryptocurrency miners run smaller operations in the United States and Canada, some fueled by a single well. But some major oil companies have signed on. In North Dakota, a top oil producing state, Norway's Equinor ASA and Canada Enerplus Corp are among those that have used such mining to reduce flaring. Company spokespeople confirmed to Reuters. This is actually really interesting, and let's see if Bitcoin is or is not better than gold. Let's find out this. One day swings of 31%, a slump amid a jump in US inflation. Bitcoin delivered all of this in the past few days, undermining its claimed role as a portfolio hedge rivaling gold. While true believers still thought Bitcoin's merits as a store of value akin to digital bullion, recent events show how controversial that view is. The largest token has shed 40% after hitting a mid-April record, and its volatility compared with the precious metal jumped during this week's cryptocurrency rout. For all of 2020 and pretty much up until April, Bitcoin has been the best performing asset, so it wasn't hard to say it was an inflationary hedge given all the stimulus that keeps getting pumped into the global economy. This is said by Edward Moya, senior market analyst with Wanda Corp. So he continues saying that this week's crypto plunge and rebound was a wake-up call. Bitcoin will still act like a leveraged risk-on trade and not a proper inflation hedge. Bitcoin's 60-day realized volatility is far higher than that of gold and currently pulling away. The token tumbled 31% on Wednesday before rising by about the same percentage that day. For the week, it's down some 10%, saved by Elon Musk's criticism of its energy use, a Chinese regulatory broadside, and a possible US tax crackdown. Gold, meanwhile, is heading for a third weekly gain, bolstered by a weaker dollar and wavering treasury yields, which boost the allure of non-interest-bearing bullion. It's also benefiting from the crypto crash, according to Brian Len, managing director of Singapore's-based dealer Gold Silver Central Pte. So Bitcoin is still finding its value as a revolutionary new asset class, and similar volatility was seen after the discovery of oil, as the world began to understand its impact and future worth. It's really interesting how Bitcoin can be compared to gold in value. I mean, how a digital and abstract thing as a Bitcoin or a cryptocurrency coin, which actually doesn't really exist, can really value that much. I mean, it's pretty interesting how people can invest with value, even a digital thing, and really can sell and buy things that are really high priced with that, like they do with gold. So that's really interesting. Let's find out more about Bitcoin and some news about cryptocurrency. For instance, let's see how away from the big crypto blaze, another market tension eases. A bear market in Bitcoin, a bull market in Bitcoin, taper talk or talk thereof. So the biggest pop for meme stocks of the season. A lot just happened, and yet when the history of this week was written, it's possible a much quieter development will be the lead. After intensifying earlier this month, inflation anxiety appears to be easing. Rates on 10-year break-evens dropped by the most on a weekly basis since September, capping any rise in treasury yields. But that was enough to comfort investors in big tech. The Nasdaq 100 posted its first weekly gain in over a month after being rattled by warnings that soaring prices would eat into the future cash flows and shine a harsh light on expensive valuation. And while minutes from the Federal Reserve's April meeting signaled an openness to discussing a scaling back of asset purchases, comments that it would likely be some time until the economy recovers to that point helped prevent any knee-jerk reactions. Brian Nick, chief investment strategist at Nouvel, said that inflation is really only a problem for stocks if it's going to bring the Fed off the sidelines. And he continued saying that if you see interest rates falling, if you see inflation expectations receding, if you see the Fed continuing to come out with overall dovish minutes, it tends to be a pretty friendly environment for tech. Whether or not the US economy has seen peak growth, a series of weaker than expected reports have helped quell inflation fears. Let's find some interesting facts about Bitcoin. So we found that the idea of Bitcoin originated by the cyberpunks of the 1990s, and that was pretty an interesting thing to find the origin of the word. Let's see more interesting facts, because cryptocurrency already has a sort of history. It already has formed its history with interesting and mysterious facts also, and fascinating facts which can really make us want to learn more about this. So, how many bitcoins are there? I mean, we can ask ourselves how many are there in the world. There's a fact about bitcoins about this, because there's a limited amount of bitcoin. When Bitcoin was founded, the creator of the cryptocurrency only made 21 million. Right now, over 16 million are in circulation. However, more are being mined every day. I suppose you didn't know that there exists even a pizza day, a Bitcoin pizza day, and it is in 22 of May. So then is celebrated the Bitcoin Pizza Day. Why? Because in 2010 year, a programmer from Florida named Laszlo Hanieks successfully traded 10,000 bitcoins for 2 Papa John's pizzas. I already told this history today, but it seems pretty funny, so that was the first purchase done ever by using bitcoins. This is a pretty funny story, and that's why I want to tell it again. So he bought 2 pizzas with those bitcoins, and at that particular time 10,000 bitcoins were worth somehow like $41. Well, fair enough, for 2 big pizzas, it's a good price. But now these 10,000 bitcoins are worth over $64 million. You see, this is this is why 22 of May is called Bitcoin Pizza Day, in the memory of this interesting but sad for him fact. So now if he didn't buy that pizzas, now he would really have the possibility to buy mountains of pizzas. So if you lose your private key Bitcoin wallet, you lose your Bitcoins. That's why you have to take care of that and try not to lose that, not to lose the password or anything, because it can be dangerous. You can really lose your account and the money you have in there. So um, let's see some more. That story about pizza was really funny, and I feel really pity for that person. I mean, I think he realizes himself what he lost, but he wouldn't have the possibility to know how the future will be. So there in the world are over 1,500 different cryptocurrencies. New cryptocurrencies are appearing all the time, but it's estimated that number is the most relevant one. So Bitcoin, of course, is the most prominent, popular, and valuable of them, and the most well known. Actually, we all heard about Bitcoin, even if we didn't really made research about this. I bet that each of you heard before about Bitcoin in uh, one situation or the other. So let's see where can people buy cryptocurrency, because there are a lot of possibilities. There are many online platforms, but the most recommended by Investopedia, for instance, are these exchanges: Coinbase Pro, Cash App, Binance, BSQ. So um, some traditional brokerages offer the option to buy cryptocurrencies futures, such as Charles Schwab. This allows investors to speculate on the future price of Bitcoin, owning the currency directly. Initial coin offerings are a way to get in on the early days of a cryptocurrency. A virtual currency startup often offers a new coin as a way to raise money and publishes a related white paper that explains the parameters of the offering. These sales are usually unregulated, and it helps to have a basic understanding of cryptocurrency before participating. Um, so there are of course benefits and risks when it comes to using cryptocurrencies, and there are ways of preventing bad things to happen, like security checks and accounts, and there are some ways in which you can really make sure that everything is gonna be all right and there is no reason to worry. So um, we found out how cryptocurrencies are created, but let's see if, for instance, cryptocurrency is a financial instrument. Uh, Cryptocurrencies are not financial instruments under US GAAP, because they do not represent cash or a contract establishing a right or obligation to deliver or receive cash or another financial instrument. Um, Cryptocurrencies are generally accounted for as indefinite lived intangible assets, except in a few specific situations whereby they are held as an investment by investment companies, in which case fair value accounting is applied. Intangible assets under US GAAP are assets not including financial assets that lack physical substance. Of course, that's pretty clear. I mean, you can't have a Bitcoin in your hand. I can give it to you a Bitcoin. I can give you $1, but not a Bitcoin. That's pretty clear why they are called like this. Further, financial assets are cash, evidence of an ownership interest in an entity or a contract that conveys to one entity a right to receive cash or another financial instrument, or a right to exchange other financial instruments on potentially favorable terms. Cryptocurrencies are not financial assets. They also lack physical substance. Therefore, they meet the definition of an intangible asset and would be recorded at acquisition cost. Intangible assets are subject to an impermanent test. Any recognized impermanent losses cannot be subsequently reversed. Some believe the intangible model does not properly reflect the economics of cryptocurrencies because they can potentially be written down for impairment but never written up when they appreciate in value. This outcome could be less than helpful for financial statements users when significant volatility exists. So unlike a direct purchase, additional complexity arises if cryptocurrencies are obtained through mining activities, as described in what we talked before. So in such instances, questions arise as to whether the transaction fees should be recognized as revenue or some other form of income. Additionally, miners incur costs for computer equipment, electricity, and overhead. They must determine whether such costs can be capitalized based on existing USGAAP, such as the guidance for internally developed intangible assets or other areas of USGAAP. So let's see how cryptocurrency is taxed. The Internal Revenue Service has released very little guidance on the taxation of cryptocurrency. However, it did issue a 2014 notice in which they stated that cryptocurrency will be treated as property for federal income tax purposes. Depending on how the cryptocurrency is held, it could be classified as business property, investment property, or personal property. In addition to the character of the game, it is critical that owners of cryptocurrency track their bases. Every time cryptocurrency is used for the exchange of goods or services, a taxable transaction occurs. For example, events that are considered taxable events include a coin to fiat sale, a coin to coin swap, purchases made by the cryptocurrency, and the receipt of cryptocurrency for services. Other complexities around taxation of cryptocurrency exist, and it is very important that individuals and businesses continue to monitor future guidance. Let's see more things, because these are pretty inside depths of this phenomena of of cryptocurrency, which really are not so accessible to many people. I mean, are not so published everywhere, and you have to search for them in order to find some interesting things. So we have this decentralization that is the main characteristic of cryptocurrency. The transparency, of course, because all transactions can be transparently viewed by either having a personal node or by using blockchain explorers that allow anyone to see transactions occurring live. So this is really transparent, and each node has its own copy of the chain that gets updated as fresh blocks are confirmed and added. This means that if you wanted to, you could track Bitcoin wherever it goes. For example, exchanges have been hacked in the past where those who held Bitcoin on the exchange lost everything. While the hacker may be entirely anonymous, the Bitcoin that they extracted are easily traceable. If the Bitcoins that were stolen in some of these hacks were to be moved or spent somewhere, it would be known. So this transparency is really a good thing, because it can make you more trust more this, and can raise the security of cryptocurrency, because blockchain technology accounts for the issues of security and trust in several ways. First, new blocks are always stored linearly and chronologically. That is, they are always added to the end of the blockchain. If you take a look at Bitcoin's blockchain, you'll see that each block has a position of the chain called a height. As of November 2020, the block's height had reached 600,000 blocks so far. After a block has been added to the end of the blockchain, it is very difficult to go back and alter the contents of the block unless the majority reached a consensus to do so. That's because each block contains its own hash, along with the hash of the block before it, as well as the previously mentioned timestamp. Hash codes are created by a math function that turns digital information into a string of numbers and letters. If that information is edited in any way, the hash code changes as well. Here's why that's important to security. Let's say a hacker wants to alter the blockchain and steal Bitcoin from everyone else. If they were to alter their own single copy, it would no longer align with everyone else's copy. When everyone else cross-references their copies against each other, they would see this one copy stand out, and that hacker's version of the chain would be cast away as illegitimate. So that's why this blockchain structure really provides a trustworthy system, and it would be really easy to spot the hackers. I mean, the hacker's acts actually. So succeeding with such a hack would require that the hacker simultaneously control and alter 51% of the copies of the blockchain, so that their new copy becomes the majority copy and thus the agreed upon chain. So he just can't hack one of those heights. He has to control 51% of the copies in the blockchain, and that would be pretty hard, if not impossible. So such an attack would also require an immense amount of money and resources, as they would need to redo all of the blocks, because they would now have different timestamps and hash codes. So that would be truly a titanic work that would be really hard for someone to do. It would take years. So due to the size of Bitcoin's network and how fast it is growing, the cost to pull off such a feat would probably be really high. So not only would this be extremely expensive, but it would also likely be fruitless. Doing such a thing would not go unnoticed, as network members would see such drastic alterations to the blockchain. The network members would then fork off to a new version of the chain that has not been affected. So that pretty much is a pro argument for its security. This would cause the attacked version of Bitcoin to plummet in value, making the attack ultimately pointless, as the bad actor has control of a worthless asset. The same would occur if the bad actor were to attack the new fork of Bitcoin. built this way so that taking part in the network is far more economically incentivized than attacking it. So these are pretty good news. I mean, if you know that it would be that hard and pointless to hack these blockchains and to steal money from cryptocurrency, your trust in this should raise, and you can give it a try. I mean, or if not, at least just inform about that, read as much as you can about this, listen to videos, or find information in other ways, because this may truly be the technology and the way of existing in the future, and it would be a pity not to know how to use it and how to value this. So thank you for watching this, and we will see each other tomorrow with other videos on other themes. So thank you and have a great night or morning or